Preparing for a FP&A Analyst at AEP interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A mean to you, and how would you add value at AEP? FP&A connects operating decisions with financial outcomes by budgeting, forecasting, analyzing variances, and explaining performance. At AEP, I would translate customer demand, fuel and purchased power costs, capital investment, regulated rate recovery, and O&M into forecasts that leaders can act on. I would partner with accounting and operations, challenge assumptions respectfully, and communicate risks clearly. The role is not just reporting numbers, it is improving decisions, accountability, and resource allocation. While answering, focus on budgeting, forecasting, variance analysis, business partnering, and translating operational drivers such as demand, fuel, capital spending, and regulated recovery into actionable financial insight. Question 2. Why do you want to work in FP&A at AEP? I am attracted to AEP because it combines a large, essential operating platform with complex financial decisions around reliability, grid investment, customer demand, and regulation. FP&A would let me use analysis beyond producing reports. I could help leaders understand trade-offs between O&M, capital spending, affordability, and long-term earnings. I also value the opportunity to work cross-functionally with finance, operations, and regulatory teams while developing a deeper understanding of the utility industry. Make sure to cover AEP's scale, essential electricity infrastructure, regulated and operational complexity, interest in business partnering, and how your analytical skills can support reliable service and disciplined investment. Question 3. Walk me through how you would build an annual budget for a utility business. I would begin with prior year actuals and the current forecast, then identify drivers for revenue, customer growth, load, rates, fuel, purchased power, labor, maintenance, and other O&M. I would collect capital and headcount plans from operating teams, document assumptions, and challenge material changes. After consolidating submissions, I would reconcile the budget to earnings, cash flow, and key balance sheet items. I would then run review cycles with leadership before locking targets and ownership. In your answer, talk about historical baselines, operational drivers, departmental submissions, headcount, O&M, capital plans, assumptions, review cycles, executive targets, and final reconciliation to the income statement and cash flow. Question 4. How would you forecast revenue for AEP? I would forecast revenue by customer class, separating volume, price, customer growth, and regulatory effects. The model would incorporate historical usage, weather-normalized demand, seasonality, approved rate changes, riders, and expected timing of implementation. I would reconcile the forecast to billing or operational data and compare actual trends with the prior forecast. Finally, I would create sensitivities for load, weather, and rate timing so management understands both the base case and downside risk. Be sure to mention customer counts, usage by customer class, weather normalization, approved rates, regulatory timing, seasonality, billing data, and sensitivity analysis for demand and pricing changes. Question 5. What are the most important financial drivers for an electric utility? The major drivers include customer growth, electricity demand, approved rates, weather, fuel and purchased power, labor, maintenance, capital spending, depreciation, interest, and regulatory recovery. Their impact differs. Fuel may affect revenue and expense with limited margin effect under certain mechanisms, while O&M and capital timing can materially influence earnings or cash flow. I would connect each driver to the relevant operational owner, forecast assumption, and financial statement line rather than treating the model as a black box. Focus on load and customer growth, rates, fuel and purchased power, O&M, capital expenditures, depreciation, interest, weather, regulatory recovery, and the distinction between earnings and cash flow drivers. Question 6. Explain how you would perform a monthly budget versus actual variance analysis. I would first compare actual results with budget and prior forecast, identify material variances, and separate timing items from true performance changes. For revenue, I would examine customer volume, rates, and mix. For expenses, I would analyze headcount, unit costs, activity levels, and accruals. I would discuss root causes with business owners, validate accounting treatment, and assess whether the issue affects the full-year forecast. The final report would highlight cause, impact, action, and owner. Mention materiality thresholds, timing versus permanent variances, volume price mix analysis, investigation with owners, accrual review, forecast implications, root causes, and concise management reporting. Question 7. AEP's O&M expense is 8% above budget halfway through the year. How would you investigate? I would validate the variance first by checking ledger completeness, accruals, reclasses, and the comparison period. Then I would drill into account, business unit, location, and month to distinguish recurring cost pressure from timing or one-time events such as storm restoration. I would speak with operational owners, quantify the remaining year effect, and determine whether savings or rephasing are realistic. I would update the forecast only after documenting the root cause and confirming the operational outlook. Cover data validation, account and business unit drill down, recurring versus one-time items, weather or outage effects, timing, accruals, operational explanations, forecast revision, and communication of corrective actions. Question 8. How do capital expenditures affect a utility's financial statements and planning process? Capital expenditures initially use cash and are generally recorded as construction in progress or property, plant, and equipment rather than immediate expense. Once assets enter service, depreciation begins, and the investment may support rate base and future regulatory recovery, subject to approval. In FP&A, I would track project budgets, commitments, spend timing, in-service dates, financing needs, and expected earnings effects. A delayed project can therefore affect cash flow, depreciation, rate recovery, and forecast timing. Explain capital spending, construction in progress, depreciation, cash flow, financing needs, rate base, regulatory recovery, asset retirement, and the importance of project timing and in-service dates. Question 9. What is the difference between a budget, a forecast, and a long-range plan? A budget is the approved annual plan used to establish targets and accountability. A forecast is the latest estimate of expected results, updated as actual performance and assumptions change. A long-range plan extends several years and connects strategy, capital investment, financing, regulatory expectations, and earnings goals. At AEP, I would use the budget to measure execution, the forecast to support near-term decisions, and the long-range plan to evaluate investment trade-offs and sustainability. Differentiate the fixed annual target, regularly updated outlook, and strategic multi-year view. Explain their purposes, assumptions, cadence, and how each supports performance management and capital allocation. Question 10. How would you build a useful financial model in Excel? I would separate assumptions, calculations, outputs, and supporting data, using consistent formulas and clearly labeled inputs. The model would be driver-based rather than filled with hard codes, with checks for balance, completeness, and unusual changes. I would include scenario controls for demand, costs, and capital timing, document key assumptions, and keep source data traceable. Before delivery, I would test edge cases, reconcile outputs to known results, and ask another analyst to review the logic. Mention clear structure, inputs, calculations, outputs, consistent formulas, driver-based logic, checks, documentation, scenario controls, version discipline, and reviewability by someone other than the model creator. Question 11. How would you incorporate weather into an AEP forecast? Weather can materially affect electricity demand, especially through heating and cooling load. I would analyze historical relationships between degree days, customer class usage, and revenue, then compare current conditions with normal weather. The forecast would include a base case based on normalized conditions and sensitivities for warmer or colder outcomes. I would also separate weather effects from customer growth, economic activity, and structural efficiency changes, so management can distinguish temporary volatility from a genuine trend. Discuss heating and cooling degree days, historical normalization, customer mix, geographic exposure, seasonality, statistical relationships, scenario ranges, and distinguishing weather-driven volatility from underlying demand trends. Question 12. Tell me about a time you explained a complex financial issue to a non-finance stakeholder. In a previous role, an operations manager questioned why expense was unfavorable despite lower activity. I rebuilt the analysis into 3 components: timing, unit cost, and an accrual true-up. Instead of leading with accounting terminology, I used a simple bridge and tied each item to an operational event. We confirmed the variance was largely timing-related, improved the monthly accrual process, and avoided an unnecessary spending cut. That experience taught me to explain causes, not just numbers. Use a concise star structure, emphasizing audience awareness, plain language, visual support, business relevance, listening, confirmation of understanding, and a measurable outcome or decision enabled. Question 13. How would you handle conflicting deadlines from accounting, operations, and senior finance leaders? I would clarify each deliverables deadline, decision purpose, dependencies, and required level of precision. I would prioritize regulatory, close-related, and executive decision items, then communicate a realistic work plan to each stakeholder. If resources or timing conflicted, I would escalate early with options, such as delivering a directional analysis first and a fully reconciled version later. I would protect key quality checks and document assumptions rather than silently rushing incomplete work. Cover prioritization by business impact and deadline, transparent communication, dependency mapping, early escalation, realistic commitments, quality controls, and maintaining professionalism when stakeholders have competing needs. Question 14. What is working capital, and how would you monitor it in FP&A? Working capital reflects short-term operating assets and liabilities, commonly receivables, inventory, and payables. In FP&A, I would monitor balances, aging, payment terms, accruals, seasonality, and cash conversion trends against budget and forecast. A receivables increase could reflect growth, billing timing, or collection deterioration, while higher payables might represent timing or deferred obligations. I would connect the analysis to liquidity and cash forecasting, while remembering that working capital movements do not necessarily change reported earnings. Explain receivables, payables, inventory, operating cash conversion, seasonality, aging, payment terms, accruals, and how working capital trends influence liquidity without confusing them with earnings. Question 15. How would you evaluate whether a proposed cost-saving initiative is credible? I would establish a clean baseline and define exactly what cost is being reduced, for which period, and by whom. Then I would test the implementation plan, timing, one-time costs, service or reliability risks, and whether savings are gross or net. I would also check for double counting across departmental plans. Finally, I would assign an owner, create measurable tracking indicators, and compare realized results with the approved business case through monthly variance reviews. Mention baseline definition, ownership, implementation timing, gross versus net savings, one-time costs, operational impact, risk of double counting, tracking metrics, and validation against actual results. Question 16. What is sensitivity analysis, and how would you use it in an AEP forecast? Sensitivity analysis shows how results change when one or more assumptions move. I would identify material AEP drivers such as load, weather, fuel, purchased power, O&M, interest rates, and capital timing, then model reasonable upside and downside cases. The purpose is not to predict every outcome, but to show exposure and decision points. I would summarize effects on earnings, cash flow, and liquidity, helping leaders prioritize mitigations and understand forecast confidence. Focus on changing key assumptions systematically, identifying earnings and cash flow exposure, prioritizing material drivers, using scenarios rather than false precision, and presenting implications for decisions and risk management. Question 17. How would you ensure accuracy and integrity in a recurring management report? I would start with controlled source data and reconcile key totals to the general ledger or approved operational reports. I would use standardized definitions, locked formulas where appropriate, validation checks, and reasonableness tests against prior periods. Before distribution, I would review material movements, confirm unusual items with owners, and preserve a version history. I would also document data lineage and assumptions so another analyst can reproduce the report and identify errors quickly. Include source validation, reconciliations, standardized definitions, automated checks, review controls, change logs, access discipline, variance reasonableness, and clear ownership of data and reporting assumptions. Question 18. What KPIs would you present to AEP management? I would tailor KPIs to the audience, but likely include revenue, earnings, O&M, capital spending, operating cash flow, liquidity, customer growth, load, and forecast variance. For a utility, operational measures such as reliability, safety, outage restoration, project execution, and regulatory milestones also matter because they influence costs, service, and future recovery. I would show actual versus budget and forecast, trend direction, driver commentary, and an action or decision for each material exception. Mention financial and operational measures including revenue, EPS or earnings, O&M, capital spending, cash flow, load, customers, reliability, safety, project execution, and regulatory milestones. Question 19. Describe a time you found an error in a financial analysis. What did you do? I once noticed that a forecast variance was unusually favorable compared with operating activity. I traced the result to a duplicated expense reversal in the source file, confirmed the issue with accounting, and quantified its effect on the report and forecast. I corrected the analysis, notified stakeholders before distribution, and added a duplicate check and reconciliation step to the process. I also documented the root cause, treating transparency and prevention as equally important as fixing the immediate error. Use STAR, showing how you detected the issue, assessed materiality, traced the root cause, informed stakeholders, corrected outputs, strengthened controls, and balanced urgency with careful communication. Question 20. What would you do in your first 90 days as an FP&A analyst at AEP? In the first month, I would learn AEP's operating segments, reporting calendar, systems, chart of accounts, regulatory environment, and key planning drivers. In the second, I would take ownership of recurring reports, meet business partners, understand forecast assumptions, and validate data flows. By the third, I would deliver reliably and identify one practical improvement, such as simplifying a variance bridge or automating a check. I would prioritize credibility, accuracy, and useful questions before proposing major changes. Cover learning AEP's business model, reporting calendar, systems, chart of accounts, regulatory context, key drivers, stakeholder relationships, recurring deliverables, process improvements, and a measured approach to adding value. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.